Hello and welcome to the Freedym Show. My name is Ryan Lee, the founder of Freedym.com, the #1 resource for heart-centered lifestyle entrepreneurs. And right now you're listening to the Freedym Show. This is the daily show featuring the best 10 minutes of fluff-free advice showing you how to create a true lifestyle business, because it's not just about the money, it's about the freedom. And we have a new free special online group. Just head on over to facebook.com/groups/breakfast with Ryan Lee, and we are rocking in there. It's a free group to join. Okay, so today on our hot seat is Mark Kohler. Mark has a very wide background. He's a CPA and an attorney. He writes for entrepreneur.com and Yahoo Finance, has a top 100 blog, helps small business owners with taxes and all that stuff we don't really love. We hand it off to Mark. To learn more about Mark, visit his site, markjkohler.com, and I'll spell that for you, MarkJKohler.com. Mark, we got 10 minutes on. You ready to rock?
I'm ready to rock. Thanks so much for having me, Ryan.
I'm excited. Let's talk about my favorite topic in the world, taxes.
Woo!
Oh, my God. This, everyone talks about, what are their strengths and what are things they don't like. For me, it's I have such a weird hate relationship with taxes. Like, I don't want to look at it and I don't want to think about it. I got in trouble with the IRS years ago because my accountant screwed up. Let's just dive in. We're lifestyle entrepreneurs. A lot of people here are working from home, working on the side. Give me like the #1 way we could protect ourselves or make sure we stay out of trouble in terms of taxes.
Well, you bet. And I want to just echo what you just said. So many people feel apathetic, frustrated because they're not getting good tax advice. And so my first point is that, folks, remember, this is, generally speaking, and this is across the board, taxes are the #1 cost in your life. State, federal, self-employment, Obamacare, property taxes, all these issues. But no one wants to talk about it because it's boring or complex. So #1, this is the time of year, this is a perfect time, Ryan, for people to be thinking about what is my year-end tips or strategies that I need to take advantage of right now. You don't have to know how to do a tax return, but you need to be able to talk about this with your advisor and make sure they're coming up with ideas. So it's something that's so important, and a penny saved is a penny earned.
Yeah, absolutely. So where do we begin? Like, what's kind of the big things we need to know?
Okay, #1, as an entrepreneur, I'm just going to hit this. I'm going to hit the basics. We'll get more advanced here in just our short time together. #1, everybody, be thinking about all the little things: the cell phone, the dining, the entertainment, the home office, the Apple Watch, the equipment, the technology, the iPads, I may even put kids on salary, payroll. There's a whole topic there. But the point is, right now, during this time of the year, you should be thinking of all these little things I can be writing off. When you're a small business owner and you have a small business on the side, you have the ability to write off so much more than the average American. I call these personal conversion expenses. Be thinking about anything that relates to your business. Keep it on an Excel spreadsheet. Get used to QuickBooks, whatever it is, and then bring these up with your accountant in your year-end strategy session so that you go into 2016 strong. So #1, think of anything that relates to your business and consider it as a potential write-off.
Okay, let me just ask you this, just from a practical thing, because sort of what I do. I have one credit card and my debit card. It's only business. I have a separate one. So every single thing I do that has to do with business, whether it's the cell phone, all that kind of stuff, I put it on my business credit card and the business. So I just basically give my accountant to that and say, here you go.
That's good, but what happens is, but ultimately, as many of you know, you're going to be down at Costco or you're going to be at Home Depot, and you're going to buy something or spend for something on a separate credit card or something or cash. So I love what you're doing, Ryan. I wish more people were that separate with their accounting, but still, there's all those little things, folks, where I want to book a home office at the end. I want to maximize your mileage on your auto or several autos or a motorcycle or whatever. So there's all those little things that you can book into that. And add to what you're already doing in that separate card. So just think broadly. And most accountants say, no, no, no. You want to be thinking, yes, yes, yes. And what are the things I can do to be more strategic?
Okay.
In fact, Ryan, let me say this too on a tactical point right here is cell phone. This was a court case, a revenue ruling with the IRS just in the last 2 years, and a lot of accounts are still catching up to this. You can write off 100% of your cell phone bill, even if you're using it for personal. The rule is that you have to at least have a home phone line. So if you have this home phone line, or you're using a Magic Jack with some of your internet or something, as long as you have a home phone line, the cell phone now becomes 100% write-off. And if your spouse or children are also in the business, you can write off 100% of their cell phone. So this is a huge write-off that a lot of people think, well, I got to cut my cell phone in half or only take a percentage of it. Nope, you got a home phone line, let's go 100%.
I love it. Oh, and just by the way, let me just throw this out there. This is not meant as specific tax and legal advice, right? Always consult your own accountant and attorney, because we don't want to be held liable. This is Mark's opinion. So just want to, I know you like that as an attorney, Mark. We just got to say that.
Yeah, there's a little disclaimer. Make sure you're talking to your advisor.
Pay attention to the disclaimer. Okay, so that's one. Pay attention to the little things. What's number two?
Okay, number two, let's get a little more strategic here. And for a lot of you small business owners out there, you may be a sole proprietor, or I set up an LLC on LegalZoom because that's what I thought I was supposed to do. But here's the thing. LLCs don't save taxes, and self-employment tax could kill you on the back end if you're creating more than $30,000, $40,000, $50,000 worth of income. So where's the next tip? It's the S corporation. Be careful of these scams out there that are trying to set you up in Nevada or Delaware in a C corp. It's a scam. I've written about it for years, and I'll go head to head with anybody who wants to argue about it. But the S corporation is so powerful. So right now, this time of year, you want to make sure that you're taking the right amount of payroll, and not too much, not too little. And this payroll is what you pay your self-employment tax on, which may be about a third of your income. You funnel it through your S corp, take a little bit of salary. Everything else comes out the bottom, Ryan. No self-employment tax, no corporate tax, no Obamacare. So if I make 75 grand, I may take 25 grand in payroll. The other 50 falls through, and I save 15% on that. That could be $7,500 of savings because I'm using the S corp the way I should.
I love it. Give us number three.
Number three. Right now, I'll just say it because I brought it up earlier, so I don't want to leave you hanging. Get your family on payroll. So many people pay taxes and then give their kids money that are under age 18 or over age 18 at college. If you're helping a family member, get them involved in the business. Teach them about entrepreneurship. Get them excited about what you're doing. Use them as a resource. And then when your kids are at college and you're giving them money for tuition, don't pay taxes and give them money. Don't take it out of your personal account. Put them on the business as a vendor, helping you in your business legitimately. Now you get a tax write-off 100% for what they're using to pay for tuition. Kids under age 18, I love it. You can pay them up to $6,300 this year, and they don't even have to file a tax return. No W-2. You don't have to withhold SUDA, FICA, or workers' comp. You can create a lot of write-offs with your family members if you have children.
Wow. Is there a minimum age? Because I have 4 kids. I'll write this crap off all day. We actually do talk about business all the time with the kids. But their minimum ages. Obviously, you can't put a baby on.
That's true. Yeah, unless you're in a unique situation where maybe I've got a client that's an artist in Hawaii, and he's got his children in a lot of his paintings, so they take an artist fee. So they're younger than 5 years old, but that's a unique scenario. Most of the kids I start putting on the payroll, Ryan, and you might laugh, around 6 or 7 years old, because they're coming by the office, or they're shredding paper, they're emptying trash, they're doing cleaning. You may have rental properties and they're helping pull weeds, work in the gardens, whatever they are with your rental properties outside. But the point is, get your kids involved early, helping any way they can in the office, stuffing envelope, putting stamps on things, and maybe only pay them $100 a month. But my daughter, who was 6 years old in kindergarten, had her own debit card, and she was our paper shredder administrator, and I paid her $1,000 a year. We've been doing this for years, and I've never had a client audited. This is the family farm in Oklahoma, the New York deli, with the kids working after school. This has been around for 100 years. Use it. Get your kids involved in your business and get them paid.
Oh, that's my next order of business. And finally, as of this recording, it's the end of 2015. We're getting ready for the 2016 elections. We don't know who's going to be president yet. There are a couple of people, especially on the Republican side, who were in the states here talking about this, getting rid of the IRS and a flat tax. Without getting political, do you think that's ever going to happen?
I don't, and I've written articles about this, and Steve Forbes, who's for the flat tax, I've written articles in not opposition, but in commentary on this. Here's the issue. I'd love the flat tax. We will, but it'll never happen. We motivate our citizenry through taxation. We give people a tax deduction if they donate to charity. We give them incentives to do research and development. We give people a tax credit to buy an electric vehicle. We give people to do all these things through tax incentives. We're never going to get rid of that. You can do a flat tax and you get rid of all these industries that are built on solar energy or getting write-offs for college education and all these little things that are a part of our fiber. There's no way a flat tax is going to happen. Get over it. Do your tax planning. Think of the write-offs. Talk to your tax advisor. And I'd say that I want to challenge everybody. Expect more. This is why TurboTax is growing so much. It's because people are frustrated. They go, freak, I go see my accountant and I don't get any advice. Some of you may have learned more in this 9 or 10 minutes than you've learned all year from your accountant. Yeah. Upgrade. It's crazy.
I love it. And if you want to upgrade, check out Mark. His website is markjkohler, markjkohler.com. I definitely learned some more stuff today, and I appreciate it, and I'm sure all the small business owners appreciate what you're doing. This is Ryan Lee. Hope you enjoyed today's episode with Mark Kohler, CPA, attorney, small business expert. We are signing off, but have no fear, my friend. I will be back tomorrow. Have an amazing day. Take care, and bye-bye.